Hey folks, we are back, the Dan and Alan Show. So today we're going to talk to you guys about that slogan that I have each day that when we come in here. I'm going to bring up our website for you guys. So here's what we're going to talk about in today's video. So here's what we're here for, folks. So every day I come in and I tell you guys what I do. I'm a licensed mortgage loan officer, We do go over, how do we compare your loan and your scenario with over 30 different lenders? Well, here's the platform that we use. So today we're going to show you exactly what we do, how we do things. We're going to show you behind the scenes, and we're going to answer any questions that you might have out there. So welcome, and thanks for joining us for today. So folks, how you doing, Alan? How's the weather over there, Buster?
Oh, just great.
Okay,
thanks
so
for
here's
having
what we're going to talk about. You betcha. So here's what we're going to talk about in today's show, folks. The first thing I want to talk about is what's actually going on right now in the economy. What's going on with interest rates and the things like that. So every day I come in, please make sure you subscribe down over there. And I tell you what's going on with the economic news, what's going on with interest rates. And then we have a new section that comes in. It's should you lock or should you float? Well, a lot of people that's sitting on the sidelines right now, they're sitting back, they're saying, okay, what should we do? Okay, if we're a homeowner, does it make sense to lock in at these rates and refinance? Because we get a lot of people saying, okay, when the rates hit 5, I'm all in. Well, we want to show you today where rates, a lot of them are in the 5s. So where rates are going to go from here, they're probably going to be pretty sticky from here because Federal Reserve's not going to do too much. We have employment numbers that are kind of really off the screen. And then we also have inflation that's really, not really in check either. So the Fed's not going to do too much, I don't think, for a while. And that means mortgage rates are going to stay stagnant. So does it make sense to do anything in this market? Can you afford to buy? Can you afford to refinance? Well, that's what we're going to talk about in today's show, folks. So let's get to it. Alan, we just talked about a loan earlier, a VA loan that you were working on to help a veteran of ours. Go over that one. That one is awesome.
Yeah. I forget where it was at, but he's currently a VA loan. He reached out to us not knowing if it would make sense to refinance because his rate was at 6. But we looked at the numbers and where he's able to go down to 5.25 with minimal cost. It's saving him I think right around $350 a month just for making a phone call to us. And his current rate is actually pretty good. But, a lot of times we're looking at FHA and VA rates in the mid 5s.
So there it is. Standard. So if you have a rate, especially with FHA and VA, let's kind of go down that path because a lot of people don't understand. Okay, if I got an FHA loan, VA loan, I really want to go through all this process of refinancing. The appraisal is a pain in the butt and all these other things. Well, the nice thing about the VA loan, and Alan probably put it in this one, is you can basically get into a streamlined refinance. Basically what that means is if you're in a VA loan or an FHA loan right now, and you haven't missed a payment and your credit scores are 580 and above, you probably are going to qualify to refinance as long as the rate is at least 0.5% from where it is now. So if that's you and you're in the 6s or 7s, this is for you guys. Okay, so we're going to run some scenarios. But there was another one we had, and it was a pretty big loan. And their rate was high. We helped them purchase last year. And then we track your rates out there. So if you're new to our channel, we actually have a system called RateWatch 2.0 where we track rates for you. So you can put in your information. When rates hit where you want it to hit to at least kick the numbers, we'll reach out to you. We actually have probably about 200 people that are like 599 and below, and rates right now are like 6.2. So there's a couple hundred people in our arsenal to help out. But here's a client that called in, and we went over the numbers with him and said, okay, yeah, it does make sense to do probably, but then we had a tough time getting him qualified. So Alan, take it from there. And this is why, even if you're in a kind of a tough situation and you have an FHA, VA loan, or even a conventional loan, how this might help you. So
yeah, absolutely.
This is probably very common to a lot of people out there.
Yeah, I think they bought the home earlier this year and their rate was close to 7. I can't remember what it was or what it is currently, but the wife ended up losing her job and took a new job, but the pay was half of what they were making. So, the conventional loan, the debt to income ratio was above what is approvable, basically. So I was looking at other options and looked at FHA because FHA does have a little bit more flexibility when it comes to debt to income ratio. And FHA's rate was 0.5% lower than what the conventional loan was. So the actual savings on the loan went from like, $450 to about $600 a month by changing the program from conventional to FHA. And it saved their loan. And it's a great story because they're in a position where they're making less money, and saving $700 a month is really going to help them.
Huge. Think of that. I mean, that's cash. So to net bring home $700, you have to earn what, $1,000? So
at least
they're saving. Think of it, $1,000 a month in that.
Yeah, they got a $12,000 raise essentially.
Yeah, seriously, great way to look at it. So let's do this. If you guys have any of questions that we want to go over with today, I'm going to throw up some content here. If you want to see what rate you qualify for, just give us the details right through here. Now I know it's during the holidays right now. This is the first time we came back to this platform because we're like, okay, I think people understand what we're doing at this point, but we got a lot of new clients and a lot of new viewers. We're almost at 40,000 subscribers. So don't forget, if you're watching this video, go to our YouTube channel and subscribe. You might be the 40,000th subscriber. We got to do something for those out there. I think there's a system you can do to run those numbers. But here's what we're out to do, folks. Let's go in, and if you're out there looking to buy or you're looking to refinance, and you might say, okay, where are the numbers? What do they look like? If you're a realtor out there, hopefully you're watching. Run some of the numbers. Give us a scenario. You might have a first-time home buyer. It's like, okay, here's what my lender can do, or here's what they can do, or just you can maybe understand a little bit more on rates. So I'm just going to, while we're waiting for you guys to put out any of that information, Alan, let me give you a scenario. So let's start down this equation. We helped a veteran out there, and we love helping veterans. There was a video that we did recently, and I gave the thumbs up or kudos to Jennifer. What's her name? Beston. I don't mean to butcher this thing.
Beston or
Beston, yes. She's like the VA queen on YouTube. So if you're you probably heard of her or seen her videos, and we want to give her a thumbs up because she kind of pulled the curtain behind on a lot of these big lenders out there. They're like, we're out here to help you veterans. But then you start getting some of their loan estimates or the quotes that they're giving their borrowers, and you sit there and say, okay, the rate's $799 and they're charging them $20,000. Really? And so we're able to do some. So let's go over a scenario this year. So let's say I'm a homeowner. I'm a VA. I'm a veteran, and I bought my house. And the average house right now is, let's say, $400,000. So give me an idea, Alan. If I'm a veteran, $400,000. I got a pretty good credit score, 730, 740, 750. Let's go 740. My zip code. I live in Texas. I don't know what Texas. Let's go Chicago. 60633. I don't know if that's even the zip code.
Yeah.
All right. I'm purchasing a $400,000. Oh, are we doing? We're doing a refinance. Let's do a refinance. We're doing a refinance. These people bought it for $400,000. They owe $385, $390. You guys will be there. Okay, so they're at 90% what we call loan to value. So the loan amount is 90% of the home's value. Good credit score, the areas they're in. What's a single family home? What are we looking at? I mean, they closed last year. Rate was good. It was actually really good. It wasn't in the sevens even. It was at 6.8. So now today, what can they qualify for? 5.3. 5.3.
Yeah,
that's points, right? They're paying $20,000 in points.
No, they're actually getting $200 back.
Shit. Okay, so do me a favor. I don't know if you had this up. Let's go to the mortgage calculator. We'll show them where it is. Let's put in this scenario. Shit, I forget what it was. You probably know what it was. What did we say? 425. It's all. Yeah, that was. Let's say 425, just to make it. The numbers are going to be the same. So 425. The rate was 7. What did we say? It wasn't in the 8s. Wasn't even in the 7. They got a great rate at the time. 6.8. Fantastic rate. Now they want to refinance. We're going to say this one. And I don't know if you guys realize this. And if you're a realtor or you're a loan officer as well, if you're a veteran and if there's a veteran out there and they have a certain amount of disability, if it's a certain percentage or higher, they're exempt from a lot of fees. That's usually the perfect scenario, and I hate to say it that way, for somebody that's a veteran looking to refinance. Because if you get a VA loan and you use it multiple times, it can get really expensive. So this one, let's just, for simplistic purposes, let's just say, okay, they don't have any of those VA fees, and we'll break those down for you as well. But I can't. I'm old. How much? What's the savings on that? What's the difference in payments?
$636
just by, and we just showed you that client. Well, let's change the criteria a little bit, because somebody's going to say, okay, the person's not at 90 loan to value. We always have those people with the glass is half empty, I guess I'll say. So let's go back and just go back to the pricing engine. Let's say this person is 100% loan to value and they have a 670 credit score. So if you could run those numbers, pop it on the screen if you don't mind. We're under.
Oh yeah.
Sorry about that.
There we go.
Oh,
my bad. Okay.
Hold on, let me see if I can do it on my end.
I got it.
Okay, folks, we don't have a moderator today, so bear with us.
So 100% financing. So a loan amount matches the value. Would you say 640 credit score?
640 credit score. You know what? I'm struggling right now. My credit cards I got a lot of good credit cards. I just bought a car. I had to get a car. So what's that rate?
Oh, it changes.
5.5.
5.5.
All right, let's scroll back over to the calculator. What's that savings now? This is basically, this person's credit score is not there. The loan to value is all the way at 100%. Wrong screen. I think you just need to click your highlighter.
My Lord.
Hold on. When you do that, we're losing the screen for some reason.
It's going to come up real quick.
Okay.
There he goes.
All right. So the savings now?
$606.
So you're still saving $600. So let's look at on this scenario, and you probably know better than anybody on our whole team. On average, what are you seeing in closing costs? I know it's a generic question. I'm looking to refinance. And when I bought that house, my closing costs, my pants. I looked at it and I'm like, title fees, $5,000, $6,000, escrows, this, I spent $10,000. So if you're looking at this, the cost I would have on this VA refinance, it's that streamline thing. What are they looking like? I'm in Illinois. Yeah. I'm in Illinois. That's the zip code we used.
You're probably looking at $5,000 or less.
Okay.
And fees. Well, usually there's not much at all for loan cost, but then you're going to have, your credit report, title. Title's probably going to be your biggest expense. You're going to have recording, and then your prepaids like escrow establishment, to set up your escrow, stuff like that. So
explain that piece. Explain that piece to everybody. Because that's where a lot of people are like, okay, if I owe $100,000 and I'm refinancing and my costs are $500, I should be at $100,500, and that should equal out, right? It doesn't work that way.
Yeah.
All years.
Yeah. So whenever you refinance and you have an escrow account, it doesn't carry over from the existing loan. That gets refunded to you. But in the meantime, you have to reestablish an escrow account. And the amount needed for that is kind of we don't know really until we find out how much your taxes are, when they're due. Same thing for your insurance. So that could be, typically 3 to 4 months of taxes and a few months of insurance is typically what we see.
Yeah.
But it just depends on when they're due and when you're closing. So that number for the escrow is kind of hard to pinpoint early on in the process. But that's why, because, and I don't really consider that a fee because it is your money for your taxes and your insurance.
Right. So, here's the thing I always explain to somebody. They're like, okay, well, it's $10,000. I'm like, well, think of it this way. Yeah, you have to put the money there, but it's really your money. So here's what would happen. You bought a house. The next day, you put all that money in your escrow. There's $10,000 there. The next day, you win the lottery. You're like, shit, I'm going to pay off my house. You send in a check to pay off the house. you're going to get a check back for all that money in your escrow, because that's your money basically sitting in the savings account to pay your real estate taxes and your homeowners insurance down the road, next year and so forth. So that's how it's a bad way to do this, because when they're going through the numbers, they consider it a fee. But like I just said, if you did that scenario, the money's just in a bank account sitting there for you. So let's get over to we have somebody who actually wants a quote. I wish we had an applause button. So we do have somebody come in. We
need to get one.
We'll get one. We'll start working on this stuff, folks. But here, I'll give you the numbers if you want to plug this thing in. So who do we got? Bo, JD. I'm just going to say JD. Hopefully that's it, buddy. I need to refinance. 780 credit score, 7.25% interest rate, 338 is the O's, 450s. I mean, you got everything up there. Okay, do we got it? Got it. Here's another piece of the puzzle, JD. If you wouldn't mind answering, when Alan's doing this, you're going to see under products, and a lot of people miss this, and a lot of loan officers miss this. See where it says affordable? That's a whole different program out there that can qualify you for lower rates if you meet a specific income level for your area. So if you give us your income, your monthly gross income, that's before taxes and all that stuff's taken out, we can plug it in there. And if it's 80% or less of the area median income, you're going to qualify for a program that's called like Home Ready, Home Possible, things like that have actually a discounted interest rate. What they do is they don't hit you for your maybe lower credit scores because of your income. Pretty cool scenario there. So here's what you're looking at, JD. You're at 7.25% now. You can get 5.99. All right, Alan. Let's go over to our calculator and start running some of these numbers. So JD, let's take some of the thinking out of you. Let's see what we got here. Hey, do we have a military person with us? I hope so, because we're going to highlight you. So God bless you for joining us. Okay, so where are we with this? Is that
original loan amount?
Oh, we got a loan amount, 338.
It was probably higher. So let's just say 345.
Okay.
7.25. All right, new loan.
At that rate, they probably closed beginning of 2024. Joe, don't go anywhere, please. We'll be with you in 1 minute, I promise you. I can read any data you want if you need it.
Yeah, so he's probably going to save about $300 some.
And what zip code is that? Did we know? Did it pop up on the pricing engine or something? Because what I'm asking is, you might know the cost for title in that area.
New Jersey. So New Jersey is not terrible for closing cost. Taxes are a mess.
Brutal. Hey, you guys beat us though. I have a video. Okay, folks, my housing prediction video. We're trying to get out Saturday, but it's probably going to be out next week sometime. And we talk about New Jersey and Illinois, the two highest real estate taxes in the country by far. So, JD, if we could help you, please reach out to us. We're both on here live right now. We are the ones that take the phone calls. Just so you know, we don't have a huge call center. It's me and Alan. We take all your calls, all the sales calls, all everything. So when we're on here, we try our best. But reach out to us, please, with any information we can help you with going forward. So let's get over to who do we have here, Joe? Joe, what do we have for you? In process of loan mod, hoping rate update to updates to current rates from my now 7.225. So let's get through here to see how we can help you. Okay, so she owes right now $331,000. House is worth about $475 to $500. And did you give us?
Is this the VA one? Yeah, it is.
So Joe, can we get your credit scores? I'd appreciate that. Folks, these Nightbot things, those are me. I do that. I try to tag some things just to prompt some questions. So if you can hear us, give us a thumbs up. I'm sitting right. zip code. Just put in, I would assume probably in the 700. So just put 680 for now. And Joe, let us know, when we're done with this, if you want a further deeper dive quote. What we offer too is I'm going to show you where you guys can go. Homeowners can go to our website and credit score low 600.
Yeah. So this one, low 600s. Let me see.
Yeah. Let's give it back.
Let's just.
So you guys, so nobody thinks we're coming in and saying, "Oh, these rates, you can't get these rates." We're going to go 600.
The lowest 600 you can go.
Let's see what we got for you, Joe.
575.
575 work for you? If it does, please reach out to us. We'd love to help you. This is basically how it works. And that's what we're going to do. We're going to go over the numbers with you. We'll go over the VA situation with you. Joe, maybe that VA might not be, if you're not disabled or anything, and maybe you refinance a couple times, the VA loan might not be the best fit for you. VA, if you're refinancing multiple times, sometimes they can charge up to 3.3% as a fee, as a VA fee, just to insure your loan. So her loan was how much? $400,000. You're talking $15,000 you'd have to pay to the VA to insure your loan. To me, my apologies. To me, there might be another solution for you, but that might be the best solution for you. So those are all the things that we go over with you guys during consultations. Alan, could you pull up our website by chance? If not, I might be able to do it on my end. Here,
I can do that. Hang on.
Okay. Here's what I want you guys to do. If you're a homeowner or a home buyer, that's what, if you're watching this show, most likely that's who you are and why you're watching here. Let me give you some tools that we just created on our website to pretty much help you out. Okay, so if you're a homeowner right now, there's a tool up there. It's right below my logo at the top. It says RateWatch 2.0. Okay, what that is for homeowners. Here's what we're going to do. Just plug in your loan information, what your current mortgage situation is now. What rate do you think you'd want to refinance? Just plug it in. I'm going to take it from there. Let me do the heavy work. We basically have a system in place right now that's alerting us to whenever that your rate triggers, I'll call you, I'll text you, I'll email you. I did 5 yesterday. We have hundreds of these at like 5.99. Rates aren't there yet, so we're just getting you guys prepared. So use that tool up there. But like Joe, for example, if you already got a quote out there and you're like, okay, what can you guys do for me? And you don't have access to the show like this, well, behind the scenes, there's a rate or loan estimate review system right through there. Okay, upload your loan estimate. Okay, what we'll do is most likely Alan's going to do it or myself. We'll give you a screenshot and basically like this. We're going to show you here's the rates, here's what your savings is going to be. But biggest and most important thing, here's what your fees are going to be. You have to include those in there. Okay, because you're going to see rates. Don't get wowed over, somebody give me a 4.99 rate, but it cost me $20,000 to get it. Does it make sense? Probably not. So these are all the things that we can help you kind of behind the scenes. So let's see, what do we got, Joe? Did we do good? That's not bad. I'll definitely reach out. So please, Joe, even if you don't reach out, you guys don't be timid on calling us. This is exactly what we do during our consultations. We just go over and it's like, okay, here's what you can qualify for. Let's, if we can help you, cool. We'll send you all the details, the paperwork. We'd love to work with you. It's not hard sales. If we're saving you $600-700 a month, and we can beat everybody else in the rates and fees, hopefully we can win you as a customer. So that's what we do for a living. Okay, and I just wanted to show you kind of behind the scenes on how we do some things. So let's do another scenario out there. Let's say, for example, is anybody on here, anybody looking to buy? Okay, so let's look at this. Here's what a lot of people are saying. Okay, nobody's buying because the rates are too darn high. Well, the rates in November 2023 were 8%. They're at 6.25% now. Okay, so let's run another scenario. This is a first-time home buyer. We just met with a group of realtors a little bit ago, and we're like, they're trying to sell this one product, and I'm like, why aren't you trying to reach out to first-time home buyers? And those also because they don't really want any clients with under a 680, 700 credit score. I'm like, how many people have a lower credit score that could fit into a FHA purchase for first-time home buyers? You can even buy up to a 4-unit building with 3.5% down. Okay, so Alan, run a scenario of if you're a first time home buyer and you're looking to buy, here's what I would do. If I had to do this all over again, I would probably buy like a 2-unit or a 3-unit building, probably a 2-unit. Use the rents to subsidize my other parts of the housing. So if you just run that 475, it's a 2-unit building. I want 2 units because I want that rental income to come in to help me offset, those the crazy high prices of even taxes, especially if you're in New Jersey. You can have us in Illinois here beat. But what are they looking at if let's boost that credit score up just a little bit, just because if they're at 600, they might not even say have any savings or anything. We want to make sure you're in a position to buy. 640, that's good. Okay, what are they looking at? Is the rate, what is it, 7, 6.5, 7?
I would think no. Wow.
Wait a second. So I can get a rate in the 5s and buy right now. I was waiting for rates to get in the 5s to buy. You're saying I can buy at 5.625 on an FHA loan, buying a 2-unit
with a 640 credit score.
Yeah. So we want you to understand the programs that you qualify for, and scrap mainstream media. It is all, every day I watch it, I get anxiety attacks. If you really understood this market, you can really do some work. Maybe you can build some wealth. You can build some equity in your homes. That's what our whole program's about. We're not here, we're mortgage people. We want to make sure you're in the right program. You can afford it. What other options do you have? You might be a homeowner out there saying, okay, I got a ton of debt and I might need a home equity loan. We can do those. Most likely if you need 10 or 20,000, just call your local bank. But if you need assistance with this, these are things that we can help. You might be an investor out there that are sitting there saying, I'd love to buy an investment property or maybe even a second home, but my taxes, they suck. I'll never qualify. So we got programs for you. So that's what we want to be here for. So let's go to the next one. Who do we have? Tippy Canoe and Tyler too, wherever that came from. My mom used to sing that. Okay, here's what we got. Alan, she owed $150,000. Value's $260. Purchased August of 2024. Wow, you already have $100,000 in equity. Hopefully you put down a lot of money. 780 credit score, zip code, rate 699. Holy smokes! Here's Tippy. The first thing I would ask you is this: are you comfortable with the payment? And here's why I ask. This is for loan officers out there. If you're talking to a client, first thing you're going to ask is, don't go, okay, we're going to save you $500 a month. Do this. We want to be their financial planners. Okay, I don't want you to spend gobs of money in interest. I don't want you to spend a ton of money on fees. That's why we stress fees. Tippy, is the payment comfortable with you? And that's all the question I have for you. And if you say yes, here's what we might do. Let's look at a 20-year term. You might have the same payment and you cut off 9 years of $1,000 a month. So 9 times 12 is 108 months times up. That's a lot of money. So right through here. So this is, what term is that? That's a 30-year?
20-year.
20-year. So that might be a solution for you. Well, these are the things that we analyze for this. I'm not, we just want to make you go, never thought of that. So we're not trying to put you in any more debt. I get flack from people every day down below. It's like, oh, you're trying to do, no, you owe this money. How do we make you good financial stewards of that money? You pay a 30% interest rate, or do you consolidate into a loan over here? Now, I don't like people using their homes for the bank, but again, you have this debt out there, and we're just trying to help you rearrange that debt. So let's see what we got. And she did say payment is comfortable, but may need cash out for 182, considering a 15-year. So, okay, those are things we can talk about. We can go through, fly through and say, okay, here's your 20-year payment. But if you can't afford it, you can't afford it. We're okay with that. Let's move it to 25. Maybe the 30 years is the best for you. And then you're down the road, you're like, hey, my budget's a little bit better. I can afford some more. And another thing, one of the biggest things and things we kind of want to end with is my report that's coming out this week. We talk about the housing market and what most likely it's going to do in 2026. You're going to find a correlation there. There's going to be a correlation between affordability and where homes are going to sell. And you'll be it's intriguing when you go through it, because it's not home prices. Home prices, they've been basically flat in most cases throughout the country in the last year or two. Rates went from 8 to 6. So why is my mortgage payment still higher? got real estate taxes and homeowners insurance to contend with, and it's going up 10, 20% a year. So if you're a homeowner, maybe refinancing will just take you back to that payment that you were at when you first bought the house, and that was affordable. So those are the things we want you to go, never thought of that. So let's see. Last one we got is Justin Hanna, looking to refinance. So if you want to give us your data, we'd love to help you and run those numbers for you if you're still here with us. Alan, I apologize. I know I took the lion's reign today, but anything you want to, Alan, why Alan comes in here, he's who you talk to every day. I do this stuff. Alan he's the brains behind the operation. I'm just the beauty, I guess.
Yeah.
So if you got anything you want to pump in there, my apologies. I knew I took the reins this time.
I would just say that, a lot of the refinances we're doing now, people are probably reducing their rate on average, 0.5 to a point, and they're recouping their cost in usually a year. So it's just, chances are rates might be lower in a year, and then your break-even point is even better, and you're saving money along the way. So I would say if you're on the fence, just reach out to us. Let us know, what your situation is, and we'll work up a scenario. And if it works for you, great. If not, at least and we'll be honest with you and say, I don't think it makes sense to do right now.
Yeah.
Or, the other way where, the cost, the savings definitely outweighs the cost. So you probably want to make a move on this.
Yeah. And we're not here just, pumping you. I reached out to 2 people today and just said, no, just wait. You're saving $80.
Yep.
$80. I'm not saying it's not, but when it comes in the scheme of things and it's going to take you years to recoup your money, just hold off. We're here to help. We're not here to put you in a even worse situation. So let's, if you don't mind, Alan, let's stick around for a couple more minutes. Let's finish up with Justin. See if we can help put him on a good course to his refinance. So it looked like Justin has refinance. 430 is the value. 301 owed.
He mentioned something about in the middle of a remodel. That might make it difficult.
But, Justin, do me a favor if you don't mind. I'm not trying to bait you into calling us or whatever. Shoot me an email after this if you would. Alan, if you don't mind, Alan or I will call you just to kind of make sure we understand exactly what you're looking for.
Yeah.
And if your local lender's doing a fantastic job, stick with them. If we can help you, in a better way somehow or whatever, we'd love to help. So that's kind of how our consultations actually go. But folks, we'll be back later. I'll be doing a closing bell video right after this. It might be a little bit late, but here's, if you have any takeaways from this, if you're a homeowner right now, go to our website and use the tools we have. It's the RateWatch 2.0 tool. We're actually coming out. We actually have a calculator. If you go down below in our YouTube channel, I think it's the cost of waiting calculator. Make sure you use the code Dan because it is for sale for like 99 cents. But if you use Dan, it's free. Just plug it in there. It's just a simple calculator. It says, okay, here's my mortgage situation now. Here's what a refinance would look like. But then we went one step further and we're like, okay, everybody keeps saying, okay, rates are going to be lower next year, so I'm just going to wait. So it gives you, okay, if you wait another year, put in any rate you want on what rates you think we're going to be at. It actually tells you, well, there's what the numbers look like. It could be, most of the time it's saying, okay, because of the closing costs not being as much, refinance, because even waiting a year from now, you're losing out. But some work, some don't. So check out that mortgage calculator down below. It's brand new. There's actually 2 down there. Use them both because one is even actually I think the one down there is posted as our new debt consolidation tool. It's actually my son created that. It's awesome. That's what actually Alan was using on a file this morning, and we figured out, whoa, that one really makes sense because you can play around with it. So check out that tool down below. That is the courtesy of Patrick Frio. Otherwise, if you would reach out to us via email, go to our website. It gives you our phone numbers, Ask Dan tabs, and everything more. So folks, to conclude this, my name and Alan, we are licensed mortgage loan officers in all 50 states as well as Puerto Rico. And our slogan is one application, one credit pool, and we're going to compare your loan with over 30 different lenders. And today, folks, we hopefully showed you a little bit of a glimpse how how that's being done. And so join us each Wednesday. If you're a realtor, you're a loan officer, you're a consumer, or you have friends and family who want to figure this stuff out, have them join us each Wednesday. We can go over this and explain to them how to figure out where mortgage rates are going and the whys behind it. So thanks for watching. Take care. Happy holidays to you. We will be back next Wednesday, me and Alan. And then after that, we will probably be AWOL for about 2 weeks because of the holidays. So thanks for watching. God bless. Have a fantastic